I'm joined by Andy Hill, Managing Director of International Capital Markets Association. Great to have you, Andy.
Thanks, Mohamed. Great to be here.
So tell me, what inspired you to join the ICA event today?
That's a good question. If you think about what we do at ICMA, we're a global capital market association, and we're dedicated to improving the efficiency and effectiveness of bond markets internationally. And obviously we have a big footprint in Europe, but if you look around the globe and what's happening in capital markets, there is so much dynamism to be found in this region. But bond markets are still very nascent, and we think there is so much potential and so much to do. So being involved in events like this, it's one, an honor and a privilege, but two, I think it's a great opportunity for us and our mission, and also, I hope, for bond market participants and the region and the economy.
You have an interesting discussion today, a session around bond secondary market. Without giving all out, but maybe give us a little bit of flavor. What is the challenge that we're facing at the bond secondary market, and what's the potential there?
It's a great question, and my background as a trader and having been responsible for secondary markets at ICMA for so long, I think it's a critical question. If you look at how debt markets are developing in the region, and it has to be remembered that it's not a generic market.
Yeah.
Every country, every jurisdiction is slightly different in their journey. We're seeing more local bond issuance, which is good. That's healthy. But the constant complaint we hear is, where is the liquidity? Where is the secondary market liquidity? So this is something we're going to talk about on the panel. Now, I don't want to preempt what my panelists may say, so this is purely my perspective. But I think if you want to create secondary market liquidity, which is important, it's important to grow the primary market, it's important to bring in foreign investors as well as domestic investors, you need a few ingredients. You can't magic liquidity. So the starting point has to be having enough bonds to trade. So you need more issuance, and it becomes a little bit of a chicken and an egg. You need the liquidity to have the demand to issue more debt. So it does become a bit self-fulfilling, but you also need a diversity of investors. So you need long-term investors, real money investors, the pension funds, the life insurers, the asset managers. You also need short-term investors. You need the money market funds. You also need leveraged investors. You need the hedge funds who will come in and play relative value trades. So you need that mix. And again, it's a little bit of a chicken and an egg, right? The more liquid your market, the more debt you have, the more investors and the more diversity of investors you bring in. But the fundamental ingredient holding all of this together is market makers. You need, ideally, bank dealer brokers who have balance sheet, who can take positions. They can make prices, they can go long, they can go short, and they can warehouse those positions and then recycle the risk over time. Now, for them to be able to do that, balance sheet is critical, but they also need two other vital ingredients. One, hedging instruments. So interest rate swaps would be an obvious one. In time, as government bond markets evolve, futures, as corporate bond markets evolve, credit default swaps. But IRS is a good start. But secondly, and something close to my heart, it was something I did for 20 years of my career, repo. You need a functioning repo market. Ideally, something that can conform to international standards, so that's traded under a GMRA, so you have all the legal netting, recognition. But you need repo, you need balance sheet, you need hedging, then you can build your secondary market around
Where
that.
do you see the potential for the Middle East, specifically on the secondary market and the bonds market?
I think it will take time, but it will happen. I think maybe a vital consideration, and here's something central banks, regulators need to think about. Bond markets are not like equity markets. They're completely different. They don't trade in the same way. You can't trade bonds on exchange. It doesn't work. You can't trade repo on exchange. It doesn't work. these are OTC products. They're inherently illiquid. And just by putting them in the same exchange doesn't make them liquid. It goes back to where I was talking about. You need market makers. You need the other instruments around that, the hedging instrument, the financing instruments. And it will come. It will happen. But I think it's going to be, the panel is called Secondary Markets, a Quiet Revolution. It's probably more like a quiet evolution, but it will come.
I think this is where digitalization and tokenization comes in. And maybe if we can shed some light on that and how it can help on the bonds market and the secondary market.
It's a good point. I think it's really interesting. When you look at what's happening in digitalization, tokenization in bond markets, they're not really changing the market structure. It's still the same. You still need issuers. You still need the diversity of investors. You still need market makers. You still need repo and you still need hedging. What it does is create an efficient way of getting there. You're less reliant on CSD structures and custodian structures. So potentially you could bypass some of the heavy lift around the infrastructure for supporting this. It also creates more transparency. It potentially creates more immediacy. So there are efficiencies to be gained. I think if you're looking at a relatively nascent market, you have the advantage of perhaps being able to leapfrog some of the analog development or some of the infrastructures that are holding more developed markets back. But the market structure won't change. You still need the basic ingredients that I just referred to.
Before we let you go, if you can give me one word about the ICA event.
One word about the ICA. Dynamic. I think that's the word, and I think it really reflects what's happening in the region, and I feel it every time I come back to the region. I feel it more and more. There's a buzz. You just sense something's happening, and
it's evolving.
It's a place to be.
It's great to have you. Thanks a lot. Thank you, Andy.
Thank you, Mohamed.
Thank you. It's great to have you.